a rush job this afternoon. Silly people like clients want things doing for them, so I'm a bit slightly behind. But here we go. Anyway, good to see you all. We've got 50 plus participants as we start. About probably about 150 going to join us throughout the afternoon, which is great. And I've got Alex, my marketing manager, on the Q&A piece. So if you have any questions during the presentation, then please put them through either the chat box or the Q&A box, and Alex will be able to see them. And Alex then will ask me them at the end. There will be questions at the end. I'm guessing we're only scheduled for about an hour today, so I'm guessing that at about 4:45 we'll flick and we'll go on to the end, and we'll go on to the questions at the end rather. So for those of you that know me already, and for those of you that have seen us before, you know that I've got a bit of a brand running at the moment through COVID in relation to my shirts. And you will know, of course, that I have numerous shirts. This is one of them. This is one that was second in the Loud shirt contest during the COVID lockdowns. Anyone who's got any comments on my shirts, please keep them to yourself, obviously. You will also know, of course, that I always have my friends with me in the presentations that I do. And unfortunately, we've only got one friend today. And you'll be able to see him. He's over there, and you will all know his name, of course. It's young Benny. There he is. He's standing there, waiting patiently. Unfortunately, Sean, his normal friend, unfortunately, he caught the COVID last week, so he's in self-isolation. And we're in Tier 3, so we couldn't bring him out because obviously you're not allowed to do anything in Tier 3. Our life is basically over for the next 4 or 5 months, like it has been for the last year. Unlike the majority of people that are on the video, or on the participants, I should say, basically, if you live in the south of England, you've got a life. If you live in the north, then obviously we haven't anymore. So here we go. Let's crack on. And we've got a full packed 35, 40 minutes here. I'm going to flick into a bit of a presentation in relation to the winter budget, the winter economy rules, a bit about Brexit, and then we'll have questions. That should take me about half an hour, 40 minutes, and then we should have questions at the end. And the participants are still rising, I should say. We're up to mid-50s now, so hopefully we'll get, it's going up all the time. Obviously my shirt is getting more people interested as we go along. By the way, if anyone sees Benny falling off the little desk he's on at the back, you will let me know. It's a bit like a pantomime, this. I really don't know what's going to happen next. I'm a technological idiot, so I'm going to try and share my screen, and we're going to go from here. So shall we crack on with this? Here we go then. Let's crack on with this and see where we get to. So here we are. Those of you that were early, you will have seen my starting page. So SKS Business Group, this is our coronavirus winter economy plan, and obviously we're getting ready for Brexit. So these are a few of the comments or a few of the topics that the webinar will cover. We're going to go over some old ground again because lots of things have changed in the last 10, 12 days, let alone the last 10, 12 months, in the last 10, 12 days. We're going to be talking about the coronavirus job retention scheme, what's changed about that, self-employed scheme, lots of questions about that all the time. So we're going to go through that in some detail. Furlough, there's some changes about furlough, tax cuts and deferrals. You know as well as I do that if you're a client of the Bailey Group and SKS, you will know that I'm a great one for making sure that we've all got our proper tax allowances and that we get everything we can off our tax liabilities, obviously completely legally before we start. Everything we do is completely above board. Then we're going to talk about bounce back loans, a new thing that a lot of you may not have heard about, pay as you grow, then some government stuff about deferrals, grants, the job support scheme, working from home allowance. There's a couple of tax tips in there for you. So you've got to wait right till the end for that one, you see. That's what I'm thinking about. Try and keep you all involved until that bit. Some capital gains tax stuff. And then some bits at the end, a small thing at the end called Brexit, which, and to be perfectly frank with you, I haven't a clue where we are with Brexit. I believe that there's a talk in the next couple of hours between Mr. Boris Johnson and his counterpart in the EU to try and sort something out. So we'll go through what we know about that. Obviously, at the end of the webinar, as I said before, there'll be questions and answers. And clearly, any extra support you need, contact your local office, obviously. And then if you've got any other points you want to make, then direct number Alex, Alex.forster at the Bailey Group, at baileygroup.co.uk. And she'll obviously send out all those who are registered. She'll send a copy of the presentation. And if you really want a recording to see the shirt, then you can have a recording, obviously, as well. So let's get into some of the details, shall we?
Chris, you need to, the presentation's showing the clips of all the slides. You need to click presentation mode.
Do I?
Yes.
All right. Okay. Where are we here then? Where's that then, Alex?
So it's on the bottom right.
Oh.
So I'm not too sure why it's froze.
Shouldn't have done.
No.
Has it moved on yet?
No.
Okay. Well, I'm going through it. So let's have a look. Let's try again, shall we?
Yeah, maybe close.
Again.
Oh, there we go. It's unfroze now. There we go.
Is that right?
Perfect.
There you go. You see, I told you I was a technological idiot. So there I am in full glory. Just a bit about the Bailey Group. Obviously, I've been a chartered accountant for more years than I wish to remember. We won North East Accountancy Award Medium Firm of the Year. We won the Best SME UK Accountant of the Year 2020. We won the Best UK Property Accountant of the Year 2020. And we smashed into the top 100 of accountancy practices in the UK at number 88. Obviously, a lot of you will know that in 2020, late 2020 September, we merged with SKS Business Services, who were obviously also a top 100 firm. And that made us, SKS, as well as the Bailey Group, a national firm. So now we are all over the country. So there's no way of getting away from my shirts or my videos. So where do we go from here? Well, these are all the services. I'm sorry, but this is a bit of a plug, obviously, at the start of the presentation, which we always got to do, because clearly we want more clients. So these are the offices where we have the Bailey Group, north of England, and then we've got our St Albans office, which we like to call our London office. These are all our services that we do, business, tax, obviously, business rescue, business advisory. So if you've got problems, we can then talk you through them. Property capital allowances, payroll, MTD, making tax digital, that is, research and development claims, umbrella companies, legal services, etc., etc. We're a full service practice, as you would expect. So let's get into the big fat detail, shall we? Don't worry about reading the slides. As I said, Alex will be sending them out. There's a bit of wording on this one, only because it gives you the details. So when you physically get the slides, you've got all the detail you need. But as you all know, the coronavirus job retention scheme has been in place since March the 19th to be precise. So previously, everyone who was furloughed, that was a new word for this year, everyone who was furloughed had to have been on the pay of the company they were furloughed from March the 19th or before that. It was extended. It was stopped, obviously, as you know, in July. It was scaled down in July to August and September and October. And then because of the second spike, they then came in and gave us it back in November and December. 80%, so we're back to where we were, 80% of your employee's salary is paid by the government. And the important thing is you have to pay the national insurance and the pension contributions. I had a client on the phone today asking me what he could do because he couldn't afford to pay the pension and the pay as you earn. And I said to him, well, you were paying it before, why can't you pay it now? And he said he'd spent the money. So I said to him, well, there's not a lot else we can do. You've got to clearly pay the pay as you earn because that's what the deal is with the government. And that's what we've got to do. Maximum again, 2,500. So you've got the 80% to get you down to the 2,500. The main difference with the new scheme, so there's the scheme that runs November, December and January, the main difference is that we can have employees now that were employed on an RTI. So when your pay went in for October, if the employee was on that pay in October, they are then allowed to claim the furlough, or you're allowed to claim the furlough grant for them, which means that anyone who is employed newly by the company and paid by the company in between that March date and the date in October, you can then claim the furlough grant for. Which obviously is a great thing, because lots of people took people on over the summer, let them go, took people on, etc., and that's where it is. You need to, there's a short process now for claiming the claims. You've got to do it 14 days after the month to which they relate, and then you can also change them as well afterwards, which is a new thing on the scheme. A few tips in it: you don't have to submit it once you're on the scheme. Once you're on the website, you can actually save it and then come back to it. You can delete a claim if you want to within 72 hours, which is quite important. As I said before, you can claim for new employees, and then some really small details that people miss. You've obviously got to have the claim for a part of the month. So if you're furloughing someone for November and December, that is 2 claims. You can't do the December claim in with a November claim. It's 2 claims. Obviously, there is still going on now a thing called flexible furlough, which means that you can furlough people for hours as opposed to days, which means that it gets slightly complex when you're doing the claim. And as I said in halfway through there, the employers must pay the cost of the employer's national insurance and the employer's pension contributions. So it's about the same as it was before. You've just got to be slightly more quicker off the mark. Now, if we obviously do the claims for you, no problem at all. We'll get them done. As soon as you tell us the information, they'll be done, and then we'll go from there. If you want us to do them, you need to make sure that we have the information to do them, obviously, before the deadlines, and then we can sort all the claims out for you. Okay, so that's the coronavirus job retention scheme. That's changed slightly, not a lot, but it's changed slightly. The job retention bonus, this was a bonus that was brought out in the first scheme that was supposed to be paid in January if you kept people on in the January pay who were furloughed over the summer. It was £1,000 one-off payment for employers for each employee. So, you know, it's not a great incentive to keep someone on, because obviously you have to pay them the wages for November and December and January, and you've got £1,000 of that. Now, obviously, because the coronavirus job retention scheme has been extended, more people are furloughed right the way through. So this payment will now not be received in February. It's going to get pushed out. It'll get pushed out towards March, April, we think. We don't know. There's so much of this that we don't actually know, but that's what we're being told. It'll be pushed out past March, and you'll probably get the payment in April. But again, it depends what happens. If this wonderful vaccine works, then you never know. We may well get this further. We may well get it earlier. We may well get it later. We just don't know. But as it sits today, it'll be in March. And there are a few things in relation to this. Obviously, you've got to have a UK bank account. You've got to have paid and filed the pay-as-you-earn returns, and you've got to so it means you've got to be up to date with your pay-as-you-earn, and also you've got to, if anything's happened with your coronavirus job retention scheme claims, in other words, you've had a query from the revenue about your particular claim, you've got to have satisfied all those to get the £1,000. We're getting quite a few of those queries through. Simple queries, nothing to worry about for our clients. Just confirming national insurance numbers, confirming people, names and addresses and that sort of thing from the payroll record. So nothing really to worry about there. So the next thing that we're going to go on to is the self-employed scheme, self-employed income support scheme. This one is a tricky thing. This is the scheme that a lot of people are saying isn't fair, in that if you are a director of your own company, and you only take out small amount of pay as you earn and dividends, then you're not eligible for this scheme, and you probably have not paid any tax or paid enough tax to get through the previous scheme, the furlough scheme. So this is a scheme that a lot of people, and the furlough scheme, a lot of people are saying that the government should change to give directors of small companies a foot up, if you like, because they haven't had anything through all this. So just to remind you all, this scheme, self-employed scheme, so you've got to be self-employed. Your self-employment income has got to be more than 50% of your total income, and you've got to be earning less than 50,000 a year. What does that mean? It means exactly that, and they are checking that. So if you earn more than 50,000 a year in your trading profit, then you don't qualify. If your self-employment income is less than 50% of your total income, you don't qualify. If you have rental income, that is your only income, you don't qualify. So there are lots of things here that don't make you qualify. And if you all remember, this is the average of the 2016-17 return, 17-18 return, and 18-19 return. So there are 3 years there that they're averaging, and then then that's the payment that you get. If you haven't had 3 years, then they will take the last year, which will be the 18-19 year. Again, same numbers as the furlough scheme, so it's capped at 2,500. So the maximum you can get is 3 months worth is 7,500. A lot of you will have received 2 of these already. There's another one on its way. You have to apply for it in January, and then there is and you've got to have you've got to apply for it by the end of January, the 30th, I believe it is. And then you have to file your tax return for 1920, which was obviously due by the end of January 2020. Now, why is that? Well, this scheme has also been extended to February, March, and April. And what we believe will happen is that they will take the 1920 year into account. So they will drop the last year off, 16-17, and for the last payment under this scheme, so February, March, and April, they will take the amount that you earned in 1920. But your tax return will have to have been in on time. So that means it has to be filed by the 31st of January. That means you need to get your information to us before that date. Whilst I love you all as clients, please, please, please do not bring your information in on the 30th of January expecting us to be able to finish it in 1 day. We will not be able to finish it in 1 day. You need to bring the information in hopefully prior to Christmas. So we have got lots of time to do the work, have a chat with you about it, and submit your return. Please, please, please do not bring it in late in January. We cannot guarantee that you will have your work completed. We say this every year to people, and I know myself, my clients, the clients in the Bailey Group, I could write a list now of those clients that are going to come in the last 2 weeks asking us to do those, to do their return. This year, we will not be able to do it. The reason, because this scheme needs everyone's accounts and information to be in and done. We will be under pressure ourselves this year. So please, please, please get your stuff in prior to Christmas. We can then get it done first week, second week of January. We will not be able to do it after that. That's a warning to you all. You heard it here first. Please, please, please get it in on time. And then maybe you can get it in on time next year and the year after that. So you're not late, and we can actually do some tax planning with you, and we can actually do things with your accounts. So we're not rushing around on the last date rather. Okay, so that's the self-employed income support scheme. Where do we go next? Well, the next thing that we've got to tell you is a bit of bad news. Those schemes that you've just seen, so the furlough scheme and the rates scheme that we haven't mentioned yet, but the rate scheme where you all got the £10,000 for your property, and this self-employed scheme, they are all taxable. They are all taxable, which means, in a word of one syllable, you will pay tax on that money. What does that mean? That means it will go onto your profits for that year, for the year we're in now, and you will pay tax on it in January 2022. Please remember that. So your tax liabilities in January 2022 are going to be slightly higher because you're going to be paying tax on all this free money that you received off the government. I say free, it's clearly not free because you'll be paying tax on it, but that's the way it sits. So you need to remember that. Please, please, please remember that piece. That the furlough money is taxable, the rates money is taxable, the self-employment scheme is taxable. So you need to remember that. Now, obviously, it will go into your accounts. That means if you've had a business that's been closed, you will have made no profit. So we will be doing our best for you to make sure that the tax that you pay is as little as possible. But again, you need to get your information in early so we can look at those numbers and we can understand them and we can deal with them correctly. I do not want to be rushing around in January 2022 telling you you've got a big tax bill and trying to find out how we can minimize it for you. Please make sure you get your information in early to us so we can deal with it properly. There you go. You've all had a slap hand off me. So that's where we are. We need your information in earlier than January this year and next year so we can save you tax. That's our job. We save you tax. Okay? That's our job. We do your accounts, do your tax return, we save you tax. Okay? There you go. You've all had a slap on the wrist. And we're up to almost 70 participants, which is great news. 70 people hearing me rabbiting on. So, bounce back loans. Bounce back loans. What are these? Bounce back loans. Crikey Moses. These have been out, it seems, for ages. They were brought out in about April or May, and they almost knocked over the banking system. What do I mean by that? Well, you tried to get a bank account opened from March this year until now. It's a nightmare. Why is that? Because every single bank has had bounce back loan applications to deal with. What does that mean? Well, a bounce back loan is a loan that the bank will pay to you. It is a loan. Remember that word, loan. It's 25% of your turnover or £2,000, whichever's higher. Now, it's up to 50,000. That's all it is. It's guaranteed by the government. There are no guarantees by the directors, by the company, by the sole trader, by the partnership, by anyone. It is 100% guaranteed by the government. There is no interest or fees to pay for the first 12 months. Very simple. Interest free for 12 months. Then you can repay it at no penalty. After 12 months, the interest rate will be 2.5% per year. What does that mean? That to me sounds like free money for a year. I don't know about you guys, but I can make more than 2.5% on 50,000 in 12 months just by using it in my business. How can I do that? Well, we had a client, he was buying a truck. What did we do? Advised him to get a bounce back loan. He put a deposit down on the truck. He didn't have to take finance out at 7% for that 50,000. It saved him money. What happens now? He can decide next year whether to start repaying at 2.5% a year, less than the 7 that he would have had on the HP, or he can refinance his truck. That's what we can do for you. That's business advice. How much is 50,000 over the 5-year period it's in? That's approximately £830 a month. That's all it costs. £830 a month. We'll come back to these in a minute. This is important business advice. This is what we give to our clients. So we then move on to something that a lot of you probably have not heard about. This is what's called the Pay As You Grow scheme. Pay As You Grow scheme. What's Pay As You Grow? Well, the Pay As You Grow scheme, easy for me to say clearly, the Pay As You Grow scheme relates to bounce back loans. What does it mean? It means that your payments that I've just said are 5 years. The loan's actually 6 years, but you get the first year free and then you repay over 5 years. So those payments are 5 years. You can actually ask to have that loan extended. For how long? Another 5 years. So you can do it over 10 years. What does that mean? Well, in my simple language, that means your repayments are going to go down by half. So you're going to have a 10-year loan at 2.5%, £400 a month, £50,000. That to me sounds like not a lot of money for that loan. It really does. You can take, if you can't afford the money to repay it in this pay-as-you-grow scheme, you can take a loan repayment, a loan holiday rather. You can take interest-free payments. All that stuff is available in this if your business is struggling. But as I said, really good scheme. You need to be thinking, if you've got a bounce back loan, you need to be thinking about taking this out come later next year. If you want to keep the loan going, you can pay it off with no penalty, of course. What you need to think about as well, of course, is that the bounce back, if you haven't got a bounce back loan, then you need to be looking to get one. They are closing them in, well, I believe they're closing them at the end of December. Again, as I said all along through this coronavirus has taken everyone by surprise. We don't know if they are physically going to be closed. They may well do. They say they are. I suspect if we're going on into March, April, May next year, they will be kept open, I would guess. You need a business bank account to get one. So this is a problem that people have got. If you have set up a new company and you want a business bank account, that will be a difficult thing to do because of the time it takes to set up these new bank accounts these days. That's the pay-as-you-grow loan. Pretty straightforward. The CBILS, as everyone's calling it, the Coronavirus Business Interruption Loan Scheme, this is what I call the big bounce back loan. This is the big loan that is actually not 100% guaranteed by the government. It's only 80% guaranteed by the government, 20% by the lender. And these loans are for larger amounts of money. These loans are for your $250,000, 500, 700,000 pounds, that sort of thing. There are about just over 65,000 of these that have been given out. And they reckon that they've paid out about 15.5 billion, which is a massive amount of money. In comparison, the bounce back loans that we've just been talking about, they have actually given out something like 50 billion. So they are massively more. Shows that big business is going for these, and the smaller family-run businesses, in other words, our target market, our SME market, those loans have been taken out by a lot more of those. These are a lot harder to get. You have to actually prove that you've got a hole in your profits, a hole in your cash flow. You've actually got to do cash flow forecasts. You've got to do business plans. You've got to do lots of things to gain one of these. There are lots of people who are offering these. Obviously, your main high street banks are, and then the other lenders, the challenger lenders, as we call them, people like Funding Circle, and those are lending on this money as well. So you've got to be careful with this. It's a lot harder to get. The process is a lot longer. And we've had a client where they applied in June. They've only just got the money through last week. So it's a lot longer to get the larger amounts of money. And as I said, there will be a guarantee on it. 20% is guaranteed by the company or the director. So you could well be opening yourself up to a personal guarantee. And those of you that know me know my feelings about personal guarantees. Don't take them if you can definitely avoid it. So where do we go next? Well, next we're into government deferrals. So all of those of you who deferred your VAT in March last year. So one of the very first things that Rishi Sunak did was to defer the VAT that was due in the period March to June. So April, May and June payments. You didn't have to pay them. And they were postponed until March this year, until the March quarter next year. Now what he's done is he said that if you are actually struggling to make that payment in March next year because the coronavirus has dragged on for longer, then you would be able to take out an interest-free loan with the government and pay that VAT over 11 equal instalments. You have to opt into it, so it's not something that's automatic. You've got to ask for it. And again, that process hasn't been issued yet. It will be issued in January or February, we guess. But as long as you've done that deferral, then you are you are eligible for that extra deferral, if you like, over the 12 months. Next thing there, if you are a self-assessment taxpayer, which 95% of our clients are, then if you've got up to £30,000 of self-assessment liabilities, then you can ring up and have a time to pay facility put in for another 12 months to pay your payments. Now, a lot of people might think, well, that's all right. You know, we haven't got a really big tax bill in January. But remember, you had the choice to not to pay your July payment. So has your July payment been made? If not, then your tax liability in January will be bigger. You'll have your July payment to make. You'll have your January balancing payment to make, and you'll have your January 1st payment on account to make. What does that add up to? That adds up to half your tax in July hasn't been paid, half your tax in January hasn't been paid, and a balancing payment hasn't been paid. That to me looks like over 100% of your annual tax liability is due in January. I would hope everyone has already seen, and certainly our clients have, our videos have been saying this, certainly that piece has passed a lot of people by. That is a big bill. It could well be your largest tax payment you've ever made. You are paying over 100% of your tax in January. And that's why they brought in this time to pay. If your tax liability is more than 30,000, then you can go on to a larger payment plan, but you've got to fill in lots of forms for HMRC, and they may not allow you to do it. So you've got to be careful on that one. Where do we go next? Some of the government grants. These are from Mr. Sunak. They're into, as you will all know, they're into making your home more energy efficient now. So you can get grants for insulation, grants for installing a low carbon heating system. You'll see on my slides, it says click here. When Alex sends you the slides, obviously there will all be links in these slides to all of these things that I'm talking about. So therefore, don't worry about going into them now. Don't worry about what I'm really saying in relation to the detail I'm giving you. You can click into them and find all about it when you get the slides. You'll all know about the stamp duty reduction up to 50,000 until May 21. That obviously is in effect now. Stamp duty, what does that mean? Well, or what does that physically mean to people? This is a question I'm getting asked a lot about now, stamp duty. How can we avoid the extra 3%? So those of you who don't know, if you own your own home, your own principal private residence, and you have another property, and you buy another property, that means you'll pay an extra 3% stamp duty. How does that affect this stamp duty piece here? You will just pay the 3% on the new property. Now, what does that mean in reality? In reality, that means, and an easy way to think about it is, at the end of the day that you are looking at, so at midnight on that day, how many houses have you got? If you still own your principal private residence and you have another house, you will pay the 3% extra stamp duty. If that extra house costs you less than £500,000, the 3% is the only stamp duty that you will pay. So remember that. At the end of the day, how many houses have you got? It is a very simple question. You must know how many houses you've got. If it is more than one, so if it is 2, you are paying the extra stamp duty. There are rules around principal private residence. There are rules around about times to sell your principal private residence if you're moving from or to a new principal private residence. We can advise on that separately. Again, get in contact with your local office who will talk to you about that. VAT, you will all know about the horrific time that hospitality and tourism is going through. Those of you in tourist areas who have got hospitality businesses, I really feel for you. And the Chancellor reduced the VAT rate down to 5%. This has been extended now until the end of March. And it's all about food, non-alcoholic drinks, pubs, bars, all that sort of thing, and you can get the 5% reduction in the rate. Now this leads on to something else. That may mean that you make more profit, because some hospitality venues are keeping their prices the same and are just reducing the VAT so they make more profit. I don't have a problem with that. They've had a really hard time. I'm happy to pay £3 a pint £3 a pint of lemonade, as you would do in the south of England, because it's a complete expensive place to live, and never mind. And in my £3 pint of lemonade, there may be VAT. If there's VAT, that's only 5% now, which means that it was 20%, so my 15% goes to the hospitality owner. I'm fine with that. I don't want a reduction in my price because he's got a reduction in his VAT. I'm completely fine with that. I'm happy to pay the same price I always paid. However, does that mean that the hospitality owner is making more profit? Now, that's a question for the hospitality owner. If the answer is yes, then he's got to be really careful when he's applying for some of these furlough schemes, bounce back loans, self-employed schemes, because in their terms and conditions, it says you have to have been adversely affected by COVID. Now, I know you all have, so please don't shout at me, don't shoot the messenger, but you've just got to make sure that you have been adversely affected and that you are not making more profit than you were before. We've had this case today in the office where I'm sat today, where a client actually has made more money in the last 3 months than they did in the same period last year. You've got to be careful and you've got to look at the money that you're making. I realise the whole year may be a write-off, it may be horrible, but since the VAT reduction, have you made more money? You've got to be careful and you've got to be honest. And we can help you through all that, obviously. What else have we got on government grants? We've got things called a Kickstart scheme. This is a massive scheme, £2 billion for young people. And they are basically taking placements. You get paid an amount of money for taking a placement, to keep people, young people, off the unemployment registers. The same with training and employment. You will be paid money for taking apprentices, and you get payments throughout their apprenticeship. This is a great way to take on people. You can look at them. If they don't work out, you've got the payment, and you've actually had a chance to do, if you like, an on-site interview with them on the way through. We've also got things about green investments, massive grants for decorating houses, grants for landlords, home efficiency, as we've already said. So there's lots of things going on with grants at the moment, and most people are pretty clued up on them. If you're not, again, ask your local office, they can talk you through it. The job support scheme, this was a brand new scheme that was brought out, supposedly started in November, or was going to start in November, I should say, and it's not in anymore. So I'm not going to talk a lot about it. It's been put back now. Why is it being put back? Because the coronavirus job retention scheme was supposed to end in November. This didn't. This was supposed to come in its place. This is now being pushed back. Why? Because the coronavirus job retention scheme has been extended. So this is being pushed back. There'll be lots more about this in the future, lots more. And this basically is what they do in Germany, where essentially you can pay you pay your employee for working a number of hours during the week, so they don't have to be unemployed during the week, basically. So what have we got next? What have we got next? Here's some tax tips for you. A little tax tip. We've obviously all been working from home. So what's the government done? Because it's going to cost me more tea and coffee to work from home, more biscuits. It's going to cost me more electric to work from home. I've got to have a bigger broadband, etc., etc., etc. So therefore, the government have said, oh, we can help people. How are they going to help them? £6 a week. I shall wait until the laughter calms down. £6 a week, and that's the tax. That isn't the tax you get back. That's the tax relief available. What does that mean? If you're a 20% taxpayer, that means you get £1.20 a week. Great. Thanks very much. So it's cost me more than that in tea and coffee in a week, let alone anything else. So there we are. Obviously, there are other things you can claim from working from home, but what you've got to be careful, of course, is if you are working from home, then you can't be furloughed. Remember that. If you are working, you cannot be furloughed. So just because you're not in the office doesn't mean that you can be furloughed. So you've got to be careful about that one. Where do we go next? We're going to skip through a couple of quick things here before we get on to the elephant in the room, obviously. Capital gains tax. So if you sell a residential property in the UK and you are a UK resident or you are a non-UK resident, so in other words, anyone, then you have to report that sale to HMRC. What does that mean? That means you've got to fill a form in within 30 days and pay any capital gains tax that is there. What does that mean? That means if you don't do it, you get a fine. End of story. There is no way out of it. That means that either we have to do it for you, you have to do it, or your lawyer has to do it. You have to take a decision who does it for you. You, your lawyer, or us. Clearly, we know all your tax details. We can fill the form in for you. There will be a fee for doing that, but that is the price that you've got to pay to do it. If you want to do it yourself, that's fine. I've done them. It takes about 25 minutes, maybe half an hour, if all the information is here. So it's not going to be a massive fee, but there will be a fee for it. And obviously then you have to pay the tax. So what does that mean in real terms? Well, in real terms, it means that as soon as you get the money for the sale, you've got to take out the tax element, put that somewhere and pay it to the revenue in 30 days. Please do not spend all the proceeds. You only need to declare this if you're a UK resident, if you have made a profit. Now, that's all well and good. I'm advising my clients to declare it even if they haven't made a profit. Why? Purely because then the revenue have got the details of it. That's why. What we don't want is HMRC not to get the details of this. If you sell a property at a loss, you don't have to tell them. You have to declare it on your tax return. But what I want is for everyone to make sure that the revenue know about it. Because what we don't want is clients not declaring things. And therefore we need to make sure that that's right. Declare it. Why not? Makes no difference. If you're a non-resident UK and a non-UK resident, then you've got 30 days. Even if you haven't got any tax to pay, you've still got to declare it. So and there are interest and penalties if you do not pay the tax and if you do not fill the form in. And as I said before, there's no appeal against that. You've either filled it in or you haven't. And that's how we can help. This is a big shock to people. People haven't expected this. Some people's lawyers are refusing to complete on properties unless they sign a waiver in relation to this capital gains tax piece. You need to make a decision who's going to do it for you because someone has to. Reverse charge for VAT. This will affect people who are individual businesses who are registered for VAT in the UK and operate inside the construction industry scheme, the CIS scheme. So what does it mean? Very, very quickly, we are going to hold a seminar about this in probably February, late January or February. But what does it mean? Basically, it means that you will not be paid the VAT on an invoice if you are in the CIS scheme from your contractor above you. So if you give me an invoice for £1,000 plus VAT, £1,200, he will only pay you the £1,000. What does that mean? That means you have not got that VAT to fund your cash flow for 3 months before you pay it over to HMRC. What does that mean? That means you could run out of cash. How do we get around it? Really good way to get around it, go on monthly VAT accounting. What does that do? That means you account for the revenue on your VAT every single month, as opposed to every quarter. Yes, it's a bit of admin, but it means then that you're up to date all the time and you will not have that cash flow disadvantage. Think about that. As I said, we're doing a big piece about this in January or February, comes in March 2021, although having said that, it has been put off 3 times already, I believe. And so we don't know what's going to happen. But like all things, we have to prepare for it coming in so that we can deal with it. Late filing penalties. These have been waived for your 18-19 tax return because of coronavirus. If you're late with your return, you will get a refund or they'll be reduced. Although if you are massively late, then yes, you will still get the fine, obviously, but you've got to try and do it on time, and HMRC will look sympathetically at any reasonable excuse. That is a change from their normal attitude. Their normal attitude is a reasonable excuse is you are dead. That is a reasonable excuse. Normally, that's their excuse. Now it's any reasonable excuse relating to coronavirus, obviously. Okay? So just be careful about that piece. And the final piece today, Brexit. Now, I was going to do a massive thing about this and take over half the presentation because I was absolutely assured by everyone I know in the higher echelons of government that it would have been sorted out by now. But as I said at the very start, it isn't. We don't actually know what's going to happen because nothing has been released. So we have to presume the worst. How do we presume the worst? Well, we have to look at the worst case scenario. And the worst case scenario is that we drop out with no deal and then we have VAT issues, because VAT is the most important thing across Europe. If you do any work for Europe and you are in a service industry, so like our industry, for example, and you are doing services, you are not doing goods, then there's different VAT rules. If you are selling goods across Europe into the EU, then you will need one of these EORI numbers. This is a brand new thing for people who have never done this before in the EU. For those that have done trade with the EU, they probably have already got this EORI number. And you will need to put that on all your documentation. You will also need to find out the EORI number of the person you're going to, exactly like you would for the VAT number. Those things are the same. They have not changed at all. What you need to understand is that the EU will not be acting as normal from January. And all this is on these slides. What needs to happen here is that if you are dealing with the EU and you have VAT issues, you need to get in contact with us and we can talk you through. It is a massive change. You need to understand exactly what's going on, because what are the consequences? The consequences are your goods that you're trying to import will not get past customs. That's the issue that you're going to have. And the issue that you're going to have is not that they won't get past customs for a day or 2 days, because there will be thousands of people that will be stopped. It will be weeks, months. The customs people will be snowed under, absolutely snowed under. So you need one of these numbers. Again, we can help you. Lots of complex forms to fill in. We can help you with all that. Come and see us. We can deal with it all. We will be doing once we understand exactly what's going on with Brexit, exactly what deal we've got, we will be doing further seminars. We will be doing further videos. I will have to buy some more shirts for those videos. Okay, these are important points. Customs changes. We are going to be operating a full external border. You need to understand that. There will be different things you need to declare. You need to understand this. These are all the links on the slides. You can see the links. They'll be sent to you. Read them. The most important thing is the economic operator registration and identification, the EORI number. You need to get one of those. You probably already have one if you already deal with the EU. There are lots of things that are going away. So things like the old Intrastat returns, they're not happening anymore. Things like having to put the foreign purchases on your VAT return, that's not happening anymore. So you've got to be careful about that. There are other things that are falling out. The old postponed accounting system, which was a deferral of import VAT that a lot of people don't understand, that is falling out as well. Oh, that's going to be changed as well. So you've got to be careful with everything that we're doing here. The Brexit piece is a massive piece, and clearly it needs a seminar on its own to go through. Those of you that are dealing with Europe, let us know. We can do a bespoke talk to you. We can talk you through everything that you need to know. The important thing is you need to be ready. The most important thing, therefore, is you need to get one of these EORI numbers. And they can take about a week or so to get. So depending on where you are in the train of things, if you're already exporting to the EU, you've probably already got all this stuff. If it's something you're thinking about doing, you need to get one of these numbers. Talk to us, we can talk you through it. The VAT side is really, really complex in Europe, and it will get even more complex. Okay, so there we are. That's a very, very quick run through of what we've got today. You will be getting all the slides. I am going to show that I'm a technological idiot now by stopping to share my screen, and hopefully Alex is there with some of your questions. So I'm going to stop sharing my screen, and Alex, are you there? Come in, Alex.
Hi, Chris. Yes, so we've been having quite a few questions. So we've had a few on your shirt that everyone wants to know where it's from and saying that you look very good tonight.
Well, clearly I can't tell you where it's from, otherwise everyone will be going to buy them, won't they?
Yes. So the first question is, will all companies be affected by higher tax rates in 2022, or just the ones that have furloughed their staff?
Oh, what a good question that is. Well, tax rates are a different thing to tax liabilities, obviously. So tax rates, everyone expects tax rates to go up, because how are we going to pay for this? That's the problem. How are we going to pay for coronavirus? That's the issue. So moving forward, yes, tax rates will go up, but this government has made a promise that it won't increase personal tax rates. I suspect corporation tax rates may go up. I suspect national insurance may go up. I suspect the limits at which you pay 40% might come down, so you'll pay more 40%. There will be lots of things happening over the next 2 or 3 months with the budget coming up and with everything else coming up. So we'll keep an eye on it for you, and we'll let you know. But certainly, if you haven't furloughed anyone, then obviously your tax liability could well be lower because you've not got that money in, and you've probably not been working. But so keep an eye on us, and we'll let you know where we're going.
Brilliant, thanks. So the next question is, can a normal partnership be eligible for a bounce back loan?
If you have a business bank account, then the answer is yes.
Right.
So I have a partnership at the moment. One of our businesses is a partnership, a normal partnership, and we have a bounce back loan. So the answer is yes.
Brilliant, short and sweet, that one. So, do you pay capital gains tax on the sale of your main residence?
Do you want it even shorter and sweeter?
If you can.
No is the answer to that. There is what's called principal private residence relief, which you do not pay capital gains on your principal private residence as long as you have lived in it all the time you have owned it. If you have rented it out, there will be capital gains tax on that rental period. You've got to be careful if you have used it for your office as an office for your business. There could potentially be capital gains tax. Obviously, we can tell you ways to get around that and release the claim to get around that and reduce it. So again, if you've got an issue with your principal private residence, please ask one of your local office and your local manager. They'll talk you through it.
Brilliant, thank you. So, are HMRC giving longer to file accounts and pay corporation tax at the moment?
Yeah, what a great question. Okay. The answer is in 2 parts. The first answer, or the first question is, are HMRC giving longer to file accounts? Well, when we file your limited company account, so 2 types of accounts we file, let's start with that. Limited company accounts and any other accounts. Limited company accounts get filed at Companies House. Companies House have extended the deadline by 3 months. Okay? However, HMRC have not extended the deadline for tax payments. That is 9 months after the year end, this is. Therefore, if you do not bring your books and records into us until the 10th month, you have missed your corporation tax payment. There will be interest to pay on that. We will then do your accounts, and then we will send them to Companies House and HMRC. There will be an interest payment to make. In relation to the other sets of accounts, so your sole trader accounts, partnership accounts, normal things, those deadlines have not been extended. Okay, so the tax return deadline, end of January, is the same.
Brilliant, thanks. So my company exports a service to Europe, not goods. Do we need an EORI number?
No, you don't, because you are exporting a service. It's only relevant for goods.
Brilliant. If you have more than one business, say an LLP and a separate LTD, can we get a loan for each?
That's a very good question. If they are linked, so if you are one of our property clients with a linked limited company and a linked LLP, then you are only allowed one bounce back loan per group. If they are not linked, so you have an LLP and you have a completely separate company, nothing to do with the LLP, so this may be a property LLP, this company here may be a sweet shop, nothing to do with this, then yes, you can get a bounce back loan for each.
Brilliant. Can a new business formed in August have a bounce back loan?
No. A bounce back loan, the business has got to be trading before the 1st of March.
Brilliant. So we've just had a follow-up question for the previous one. Also, if we are selling our only private residence, do we pay capital gains tax?
No. Short and sweet.
No problem. And we have one more. If you have two businesses registered, are you able to get multiple bounce back loans?
As long as they do not form the same part of a group, then the answer is yes. So if you've got, let's say, for example, you run a business, let's say your wife runs a business, let's say you own a business together, then you could get 3 separate bounce back loans. As long as they all meet the criteria, so they've all got to be adversely affected by COVID, turnover's got to, or the profits have got to be down because of COVID, and they've all been operating since before the 1st of March.
Brilliant. Thanks for that, Chris. I think that brings all of our questions to an end, unless anybody has any more.
Oh, there's some flying in.
There we go. So if we declare our earned income for the bounce back loan rather than our turnover, could we change this now and declare our turnover to get a further bounce back loan?
Yes, you can increase your bounce back loan. Funny enough, I was just reading about this today, because one of the partnership that I was talking about previously, that I have, that only got a bounce back loan of 20,000. It was only a 25% of 80,000. Its turnover has gone up. What does that mean? That means I could go back to the bank and increase my bounce back loan. So yes, you can do. As long as it's 25% of the turnover for the total, you can increase the bounce back loan.
Brilliant. And I think that brings us to an end then, unless there's any more, but...
I heard the church bell clock, or the church clock belling, or just then, so that's 5 o'clock. There you go, on the dot.
We've just reached 5, so yes, I think that's all for tonight. Oh, no, wait, 2 more.
2 more.
Live in rented property, own parents' house and sold my only buy-to-let. Do I need to pay capital gains tax?
On the face of it, I'm thinking about that one. On the face of it, the answer is yes, but again, the devil is in the detail. We will need to look at that specifically in your case, and let's have a look at it and see if we can't get you out of it somehow. But on the face of it, yes, you do, from what I understand. But again, devil in the detail. Let's have a look at it.
No problem. And is capital gains tax going up on house sales?
Oh, well, that's a $50 million question. People, for those of you that don't know about property, capital gains tax is already higher on second house sales. So it's already at 28% if you're a high rate taxpayer. There is talk of capital gains tax overall going up to 40%. Only talk, mind you. So what needs to happen is that we need to understand if that's going to really happen. Now, how do I know that? Well, it's been issued by one of the tax think tanks that the Chancellor listens to and talks to. Therefore, it may well be that capital gains tax is going to go up. Does that mean it's going to go up more on property or just up to 40%? I don't know is the answer. I'm guessing it will probably go to 40% like everything else, I'm guessing. Watch this space though.
No problem. Thanks again, Chris. So I think that does bring us to an end now. No more questions.
Okay. So thanks very much everyone for joining, and as Alex has said previously, we will be putting this out on the internet probably, and we'll send it all to you as well as the slides. So thanks very much for joining, and even Benny's saying goodbye. So see you all later, and no doubt we'll be talking again in January when we do our next video. So look after that. Bye bye.